Let's move on to Africa. Fear of a black continent. This is the New York Times. Talking about Emmanuel Macron in the summer of 2017, he answered a question about why there couldn't be a Marshall Plan for Africa by calling the continent's problems civilizational and lamenting that African countries have 7 or 8 children per woman. I always say, Macron told the assembled do-gooders, present me the woman who decided, being perfectly educated, to have 7, 8 or 9 children. African birth rates haven't slowed as fast as Western experts once expected. European demographics are following Macron's law toward the grave. In 2004, the UN projected Africa's population would level off by 2100 at around 2 billion. Today it projects that we'll reach 4.5 billion instead. Whatever the explanation, by century's end, 2 in 5 human beings could be African. Anxiety in Europe is a little more specific than that, because over that same period, Europe's population is likely to drop by about 100 million. Western Europe's leaders are a vanguard here. Neither Macron nor Angela Merkel nor Theresa May have any biological children. In the late 1990s, Europe and Africa had about the same population. 100 years later, there could be 7 Africans for every European. Lots of intellectual theories and explanations to explain Trump and Brexit, but essentially it comes down to one thing: the white lash, says Ronak Gopaldas. Tanzanian billionaire Mo Dewji was found safe after he was dumped at a Gymkhana grounds in Dar es Salaam 9 days after his abduction, police say, and momentarily after it was announced that Interpol were on their way. Polsec analysts, this is very interesting. Firstly, it was confirmed that those who seized Dewji were Caucasian, white South African males involved in armed operations on the African continent. Tends to usually imply one thing and one thing only. I concluded by saying I think Tanzania is, I'm afraid, uninvestable. However, maybe the Ritz-Carlton should open a hotel. Polsec analyst again, I'm sure the Magonomics creep will eventually impact the hospitality sector after hitting mining, telecoms, NGO and other foreign-denominated industries hard. Interesting article by Simon Allison, Abiy Ahmed's Ethiopian exceptionalism in the Mail and Guardian. Autocracies trending around the world, from Vladimir Putin, Xi Jinping and Donald Trump to Recep Tayyip Erdogan. Bolsonaro, Duterte, Mohammed bin Salman, a populist, nationalist, conservative streak runs through the men shaping 21st century politics. Abiy Ahmed is the exception. I tend to agree with that, as you already know. That's why I called him the most consequential African politician since Nelson Mandela. These are early days, of course, but he has done so much, so fast. He's been positively virulent. Zimbabwe aims to clear $2 billion of arrears with the World Bank and the African Development Bank in the next 12 months, Reuters is reporting. And saying for sponsors, we will be talking to the G7 members to see if 1 or 2 of them or all of them could sponsor us and give us some lines of credit, bridging finance to be able to clear those arrears. Then Todd J. Moss, the idea of the G7 sponsoring Zimbabwe to clear $2 billion in unpaid debt arrears, especially after damning reports from the EU and US election observers, seems outlandish. As Zimbabwe faces a currency crisis, Zimbabwe Teachers Association have released a statement demanding they get paid in foreign currency, as all service providers are demanding payment in foreign currency. DP World sees a key role for the once isolated state, this is Eritrea, in its port strategy. Eritrea may play a key role in DP World's plans in the Horn of Africa, where a dozen ports could be needed to service the region. Dubai-based state-controlled harbour operators evaluating its strategy in the region after having its stake in a port in Djibouti, the main trade route for Ethiopia, nationalised by the government. Eritrea, of course, is strategically located near the Bab el-Mandeb Strait. Eritrea is going to have a major role, said bin Sulayem, We believe that the way we should look at the Horn of Africa is not at Eritrea alone, but add to the equation South Sudan, other parts of Sudan, and Eritrea's needs, and then the Ethiopian population. Elsewhere in the region, DP World is interested in helping develop Kenya's Mombasa port and in helping Ethiopia establish a logistics facility, he said. Somaliland, which has declared independence from Somalia, hosts a UAE military facility at Berbera, though bin Sulayem said that the base won't have a bearing on its investment plans. I wrote about all of this in an article in August, The Indian Ocean Economy in a Port Race. I quoted Felipe Amesto, the precocity of the Indian Ocean as a zone of long-range navigation and cultural exchange is one of the glaring facts of history made possible by the reversible escalator of the monsoons. The Indian Ocean economy preceded the Atlantic Ocean economy, where the Europeans only learned how to crack the code of the Atlantic winds, and a new Western culture arose on both sides of the ocean, long after the Indian Ocean. I said today from Massawa, Eritrea, admittedly on the Red Sea, to Djibouti, from Berbera to Mogadishu, from Lamu to Mombasa to Tanga to Bagamoyo to Dar es Salaam through Beira, Maputo all the way to Durban and all points in between, we're witnessing a port race of sorts, as everyone seeks to get a slice of the Indian Ocean port action. China, Gulf countries, who now appear to see the Horn of Africa as their hinterland, Japan, India to a lesser degree, are all jostling for optimal geo-economic positioning. Investments in ports, I said, have a long lead time, and I'm not certain that those same investments are able to recalibrate at the speed with which the geopolitics is moving. The big risk is that some of these port investments will be handband-toted. All these huge projects are a waste, said Sisira Kumara, local politician in Sri Lanka. No ships are coming to the port, no flights are coming to the airport. I said I'm bullish on the blue economy, in particular the Indian Ocean economy, which is set to relive its glory days. Unlike the marvelous song Everyone's a Winner by Hot Chocolate, there will be winners and losers. But I said everyone is drinking the Indian Ocean Kool-Aid right now. South African all shares down 12.46% year-to-date, dollar versus rand 14.3807. Egyptian pound 17.9210, Nigerian all share down 14.12%. Basic food stuff increases some over 100% in a year's span in Ghana. Ghana's stock exchange is up 11.04%. Le chef, le parrain et le bâtisseur. This is a photograph from WTB Clouds about the DR Congo. Kenya Quest Means Business is Nairobi bound. Richard Quest will come to you live from Kenya this Thursday and Friday. This is a photograph he took, which was rather good. This is a photograph Oliver Mathenge posted of President Kenyatta in Kakamega. The 10 and 30-year Eurobonds in Kenya declined by 0.1 and 0.2 points to 8% and 8.9%. The 30 years where I'm looking at, and I can happily tell you my thinking, but I'm pretty much looking at that area of the curve across the sub-Saharan African continent. My piece over the weekend was about Safaricom, the most successful startup in Kenya Inc.'s history. I'm saying its mobile money platform launched in March 2000. Safaricom was formed in 1997 as a fully owned subsidiary of Telkom Kenya. It inherited 17,000 customers. In May 2000, Vodafone Group acquired a 40% stake and management responsibility for the company. In that same year, 2000, Michael Joseph began the journey in earnest with 5 Vodafone employees in an apartment in the Norfolk Towers in Kajabi Street off Haruthuku Road in Nairobi. Today, 18 years later, Safaricom has morphed into the biggest communication company in East and Central Africa, with over 29.57 million subscribers, as per the full year earnings release. Its mobile money platform M-Pesa, launched in March 2007, is ubiquitous. And in fact, it's not a stretch to say it reinvented Kenya Inc.'s positioning worldwide. One tweet from Bill Gates confirms its ubiquity and was probably worth the entire annual Kenya tourism marketing budget. By making it easier to send and receive money, M-Pesa is transforming the daily lives of people in Kenya, he said. Throughout its 18-year history, Safaricom has bet big on Kenyans. You might not recall, but they were chasing Mo Ibrahim's Celtel at the get-go. In 2004, they launched the mobile internet. Whilst others built a mobile internet that looked like a Murram road, Safaricom built an information superhighway that connected us to the future, the world, and the 21st century. When Jack Ma visited Nairobi last year and was asked about the infrastructure deficit in Kenya, he said this, turning to Bob Collymore, "But your internet is fast." The point is, we live now in an information century, and in order to be connected to a world of 7 billion, you need a Maserati connection. Otherwise, you're not even on the pitch. The word democratization is bandied around a lot, but this one word can be applied to Safaricom. Leadership at Safaricom, from Michael to Bob, have believed intuitively and instinctively in democratization. That belief has been evidenced consistently over its 18 years. Bamba 5 and Bamba 10 scratch cards are a clear example. These denominations were widely considered plain uneconomic. I remember a time I set up my company, Rich Management, and an FT journalist scorned me in an article for the name, telling me Africa is poor. What are you talking about? And I said to her, Africa is not poor. It is unfathomably rich. And it's rich not because of what can be dug out of the ground, but because of the people who walk upon the ground. The human capital, as it were. It is this which Safaricom understood and has consistently sought to unleash. And that is why KPMG methodology has shown that Safaricom's contribution to the economy at 6% of GDP is almost 11 times higher than actual profits. I do reside in the business pages of the newspaper, so let me now pivot to the share price, because in a zombified Nairobi Securities Exchange, Safaricom remains a standout and an outlier. Over a 10-year period, the share price has risen from 5 shillings to 23 shillings and 75 cents. That's a 375% increase. Add in the dividends over the period, 4.77 shillings, without factoring in the compounding effect, which reduce it further, and shareholders have enjoyed a 470.4% return. These returns rank in the top 1% worldwide. Finally, consider the amount of friction they have had to endure from the regulator, whose philosophy has been a kind of reverse Darwinism, the survival of the unfittest. From the government, who have sought to tax this every which way imaginable. As I scan the stock market and look at the value destruction, the endless Groundhog Day of bailouts of zombie companies, I'm left wondering why we fail to appreciate that we as Kenya Inc. want 10 companies like Safaricom, not just one, and why we fail to appreciate that in order for Kenya Inc. to thrive, we need to bottle the magic Safaricom elixir and douse the entire economy in it. Safaricom closed at 23.75 on Friday. Frontier and emerging markets have been coming under pressure. This is as good a re-entry level that I can recall in at least 5 years, and if Bob has not been to see Abiy Ahmed yet in Ethiopia, I propose to go on his behalf. The tweet I was referring to by Bill Gates, by making it easier to send and receive money, M-Pesa is transforming the daily lives of people. Safaricom share price data is seen in this chart, currently 23.75, it is a buy. Kenya shilling, that's been very stable at 101, appreciated by 2.1% year to date. Nairobi all shares down 14.53% year to date. It's currently the all shares trading at a price to earnings ratio of 11.9. NSE 20 is down 24.38%. Kenya Power released a profits warning, widely expected. Its market cap is $85 million. Its price earnings ratio 1.183. The issue is now going to be around the PPAs and whether they're bankable anymore. Saiton entered into a transaction with its leading institutional partner, Talieri Team of Finland, whereby Talieri has acquired the option to subscribe for up to 20% of the shareholding in Saiton. I said this is ahead of the curve and a game changer. The biggest challenge for Kenya Inc. is not enough equity and too much debt. Edwin is therefore ahead of the curve. Indeed he is. The link for the press release is also there. Has Consult issued a Q3 property update. Lots of interesting data. Upper Hill, most expensive land at 558.3 million per acre. And then lots of average prices per acre across Nairobi. Upper Hill 558 million, Kilimani 426 million, Parklands 417, Westlands 411, Kileleshwa 306, Eastleigh 293. And lots of interesting data. Ridgeway was the best performer among suburbs, with prices increasing 2.92%. I appreciate you stopping by. I'm always grateful. Thank you very much.